Exchange. I'm joined now by Stephen Gallo, Head of Market Analysis at Schneider Foreign Exchange. Steve, thank you so much for speaking to us again. Now, it does seem like, we were just speaking on Friday, actually, and you were telling me that the euro is stuck in this range. We had some pretty bad news yesterday from Moody's, or is it bad news because it doesn't actually change the collateral rules, and now reports that we're looking at a worsening situation in Spain. Does that change your forecasts?
No, and I think, to say that the crisis has deepened, I think it's going a little bit too far. I think for the time being, we're basically stuck in a range. I think the markets are very well aware of what's going on in the Spanish banking sector. Greek government debt had already been cut to junk, and we've already seen the ECB change its collateral rules, so we know where we stand with the Greek situation. I think the fact that we're seeing a little bit of a risk-off attitude today in the markets and the euro under a little bit of downside pressure has more to do with the fact that last week we saw a lot of exposure flipping, stale positions were being covered by market participants, so we saw moves out of German bunds and into periphery debt and into the euro. And so we're seeing a little bit of that come undone now. The Moody's headline yesterday, late in the session, probably just a reminder to market participants out there that we've got a long way to go before we get through this crisis. But I think it's a bit too much to add fuel to the fire and say that the crisis in Europe is deepening as a result of what Moody's has done. I think that's going a little bit too far.
Talk me through Spain. Now, we're hearing from Expansión that it's seeking a €3 billion bank loan. At the same time yesterday, they said, well, they don't need a rescue package. What will it take for you to actually change that trading range for the euro?
Well, I mean, as far as, core structural long positions in the euro are concerned, we've seen central banks get a little bit more interested in the euro. They're starting to sniff around. But in terms of real money, longer-term investors, private sector investors, we've got a long way to go before we see some really big rallies in the euro. I think really what we've seen is market participants in the last week or so looking for reasons to not go more short the euro rather than get long the euro. We've got a long way to go. I mean, the comments from the BBVA chairman yesterday, again, nothing new, nothing that we don't know already, but still indicative of significant pressures within the European banking sector, I think.
Steve, I also want to talk to you about the UK inflation report out later today. What effect is that going to have on the pound?
The CPI figures, well, look, we're not looking for a major reaction out of that. We know that the rise in inflation and headline pressures in the UK probably a temporary phenomenon. What's going to matter more is what happens to the inflation dynamic in the second half of the year. We still have a very constructive view on sterling for the second half of the year. 2011 is the year that we worry about for sterling, is the time period, I should say, we worry about for sterling. But we think financial flows will continue to benefit the pound as the euro continues to struggle.
Steve, thank you so much. Steve Gallo there. Let's get